morning, good afternoon, good evening, traders. It is Sunday, January 30th, and this is your weekly market prep because we are going to have a big week in the markets. This is going to be kind of setting the stage for February here. Big earnings week, big headlines week. Let's talk about it. We're going to talk about and summarize kind of some of the action we saw last week and what's going on here. Talk about some of the stocks that I'm personally looking at, and then I want to set the stage for the coming economics and big earnings coming up this week. I want you all prepared because this is going to be an interesting week. And look, like we said at the beginning of the year, in our beginning of the year video, this is going to be the year, frankly, in our opinion, for risk management and for protecting your downside, both on the long bias and short bias. We need to be very smart. It's going to be a very volatile year, and it's already setting the stage for sure as we're wrapping up the month of January. Now, tomorrow is going to be the final trading day of January, and for those who may have been surprised to see the strength going into the end of Friday, don't be, because we talked about this. I don't care what the fundamentals say. I don't care what the bias is. There was a required amount of buying going into the end of the month here. As stocks tumbled and dropped more than bonds, funds actually were mandated to buy a certain amount of stocks. I'm talking mutual funds that keep a certain ratio from bonds to stock and all of that. So JP Morgan was saying that there was, tens of billions in equity buying at the end of the month. Goldman Sachs was giving it around 12. So I don't care what the long-term perspective of the market is. I don't care what the fundamentals are. I don't care what the bias is. If you need to have that much inflows and buying, it's likely to cause just a temporary surge. And that's really all it was, in my opinion. Now, we could still see ourselves go up this week. We've kind of done a little bit of a flag here, and I feel like we've set a stage to pop through this 200-day and stop some people out, maybe get a little bounce. It may not happen, but it feels like if we push through this weekly high in this 200, kind of around this 442, and if we push through here, we could see a little bit of a short squeeze. I feel like there was a lot of puts put on, a lot of leverage. We saw some massive put buying for, I believe, a 400 strike price in the SPY. So it feels like we could be setting the stage for a little bit of a temporary short squeeze. Again, we'll see. Price action needs to confirm for us. And if this market does get a bounce, does see a short squeeze, I'd expect some topping action somewhere in this kind of range here. You've had several stacked levels now at this point. You could be looking at around 447.50-ish or 447. That could be a little bit of an inflection point. My next level would probably be around 450, 450.5 or so. Somewhere in this zone, I would expect to see the topping action. And that would be great in either direction because, you'd get some areas to reload shorts and whatever. So we'll see what we get. In my opinion, the bias is still to the short side, guilty until proven innocent in this market. And, we had the Fed meeting. There was definitely some hawkish concerns in there in terms of now we're having a 25%. The market is pricing in a 25% chance of a 50 basis point hike in March. And look, if you want to listen to a good economist talk about this kind of stuff and expectations this year, go to Mish Talk. He has some really good articles. There are people who are living in la-la land out there thinking that we're going to get 7 rate hikes. Bank of America and some of the banks out there thinking that we're getting 7, 8 rate hikes. They are out of their flippin' minds. We're not even going to get into that. That's a whole nother topic of conversation. So perhaps we see a March rate hike, but even so, we now have about a month and a half, 2 months until the next Fed meeting. So now the question is, what do we do in here? I think we see probably a little bit weakness, probably more just chop in my opinion. We do still have big earnings coming up, big headlines. We're going to have to see if we start to see that economic slowdown like we're all worried about. You had the Atlanta Fed come out on Friday and cut their initial GDP model to Q1 being just 0.1%. I mean, we are just above contraction. And if we get economic contraction and economic slowdown along with this roaring inflation, we also had the core PCE deflator at 4.9% year over year, the highest since 1983. You've got insane amounts of inflation out there in the PPI, CPI. So now we're pushing into stagflation territory. It's already here, and the Fed can't deal with that without making one side worse. And the current yield curve, sitting where the current yield curve is, long end minus short end, that is going to allow 2 hikes before an inverted yield curve, which typically precedes a recession. So if you think that we're actually going to get 7 rate hikes, I want whatever you're smoking, frankly, because the current state of the yield curve, the Fed would be essentially pulling a Volcker and would just spiral us into a recession. And hey, maybe they're going to go scorched earth to curb inflation, but that is a whole nother basket that we need to prepare for if that ends up being the case. So that's kind of where we are. It's definitely a trying time in the market. It's a volatile time. We have the SPY kind of flagging under its 200-day. You have the Qs, which are obviously weaker as rates were exploding, sitting down here at a pretty decent inflection point doing a flag. And then the small caps were actually kind of leading us down here. But if I were to pull up, say, the NASDAQ volatility, we saw a nice, strong NASDAQ pop on the NASDAQ volatility. If I go to, is it RVX, I believe? The Russell volatility, despite the Russell leading us lower, the Russell volatility was nowhere near as high. We couldn't even peak out over the December highs. So that's actually what's interesting to me, and that's partially why I think we could see a bounce, especially in small caps, was despite this weakness in leading us lower, Russell volatility really didn't spike to the same extent. Now, yes, SPY volatility did get a brief little burst in here. We were wondering why it was lagging so much going into kind of these highs from December, but this is an interesting dichotomy we're seeing right now. So I think that this is something that we should start watching. It's not something we've typically watched in the past, but watching the differences between the NASDAQ volatility, the CBOE market volatility, and then this Russell volatility, because the markets and their respective volatile indexes are doing a little divergence here, and it's very interesting. And this is going to be something that we have to watch and continue to monitor. So that's going to be a pretty interesting scenario going in. Obviously, we also want to be watching rates, seeing a little flag up here sitting at the highs. If we do continue to pop through, it would obviously continue to put downward pressure on the market depending on the velocity. Not too worried about the action we're seeing at the moment, and just continue to watch the yield curve, because if the yield curve continues to compress, the market continues to price in policy error, the market's not going to be too happy about that, and we could continue to look for that Powell put. And Powell will defend the markets, all right? Make no mistake, if the markets really start to feel the pain and start to feel the pressure and we really start to get into nasty territory, they'll step in. We are seeing RSI get a nice pop here, a little diverging. RSI definitely popping more so than the equity. So it's going to be interesting to see where we open up on Monday. A gap could ruin things. We've largely gotten through the weekend unscathed so far, but we'll have to see how things present themselves. Taking a look at some of the commodities to prepare us there. Oil still sitting up here at highs, still just kind of consolidating up here. Nat gas obviously had a nice little pop going into the end of the week. Northeast U.S. getting hit with another cold front, causing a lot of flights to cancel, yada yada. Same old deal. I've been bullish oil and frankly energy for some time. I'm still largely bullish. We'll have to see how the Ukraine situation continues to develop. That's certainly not making things easier. The Fed cannot get a handle on oil. It's not going to be possible for them. I saw a lot of people arguing that OPEC doesn't even have control over oil anymore, as governments are just voracious in their demand right now for oil and for energy. So we're going to have to see how that continues to develop. Gold, meanwhile, took a nice little spill as the dollar surged after the Fed meeting. Really seeing the dollar kind of take off here. I wouldn't expect a huge continuation in that kind of stuff, especially with some of the growth concerns that we're seeing out there. But we'll just have to see how this happens, because the dollar is still sitting up here at 52-week highs. Gold, if they think that they're going to get a handle on inflation, kind of seeing that pressure on the downside. But I would expect a little bit of just a temporary bounce, even if it's just from being oversold. We will have to see. And then finally, last but not least, our friend crypto is getting a little bit in here. So look, if you wanted to take a nibble in crypto and say, keep a tight stop around there, I wouldn't fault you for it. It's not the sexiest thing that we're seeing out there. RSI is diverging a little bit. We are seeing RSI pick up a little on, say, like Ethereum. We've definitely done over 50% retracement of this body. So I wouldn't be surprised to see a technical bounce in here. Maybe we see a little spec play go into crypto. My biggest issue is it's trading a little too one-for-one with the market right now. It really shouldn't be doing it to this extent. So I'm hoping that we start to see that break back off. I'm not confident in crypto until we see the divergences between crypto and the markets once again. That's my big concern there. So that's what we're seeing in commodities. What are the expectations this week? Well, first of all, let's walk you through the events. Monday, we're just going to have Chicago PMI. It's going to be nice and easy. 9:45 a.m. Eastern, it's going to be nice and quiet. Tuesday, we're going to start to pick it back up. We're going to go into manufacturing type numbers. PMI manufacturing, ISM manufacturing, construction spending, and my favorite report, the JOLTS report. Now, I've talked about this time and time again. The JOLTS report is going in the wrong direction. People think, oh, great, unemployment's back down to pre-COVID levels. We're saved. Not necessarily. Job openings are still way too high. Job openings, in fact, are getting higher. Despite unemployment going down, people are leaving the labor pool, and the job openings numbers have been going the wrong direction every single report for the last several months. And then you also have the quitting, labor turnover and quitting at all-time highs going the opposite direction. So this labor market is not out of the woods, in my opinion, and I think that this JOLTS report is going to continue to show that. Wednesday, we do have ADP employment, but who cares? That largely gets revised very often, and I really don't trust that number worth a damn. Thursday, you have productivity and cost, jobless claims, factory orders, ISM services, the nat gas report, and Fed balance sheet. So you get a little bit of numbers in there as well. And then don't forget, Friday is going to be the first Friday of the month, so we get the employment situation, the jobs number. I think it's going to be a very telling week in terms of the labor market. We're going to know a lot more going into the next month, and then eventually going into March, where we're going to see the next Fed meeting. So I guarantee you this is going to be an important number in terms of really gauging, is the jobs market improving and what's the labor situation look like. Now, in terms of earnings, we have a couple big companies reporting earnings. Monday going to be very quiet, no real companies to report that I care about. We'll see if any have moves, obviously, after their earnings. But Tuesday morning, you've got a couple. You've got UPS, which I'm going to be watching like a hawk. We tend to get some nice gaps and moves off of earnings. UPS kind of also a gauge for the economy, how much people are shipping, buying, and doing things like that. You also have ExxonMobil, another oil and gas company, sitting very high up here, hot on the RSI. Going to be curious to see where earnings send it. You have a couple infrastructure plays like Aqua. I've played this one in the past. It's been pretty good as well. Man, and if you're looking for ADP type employment companies. Tuesday after the close, we have Google. Google's going to be a big one. All right, we already had Apple earnings out of the way. They blew it out of the water, eviscerated it. Apple's a big place for that institutions are hiding out in right now. It's overperforming the market, and it's continuing to do that. So Apple is innocent until proven guilty. Don't make that mistake. Apple had blowout earnings. Tesla had blowout earnings. Microsoft had blowout earnings. Tech is having good earnings right now, and they've set the stage for Google. So we're going to see what Google can provide Tuesday after the close. AMD reports after the close. Now, we know that their deal to acquire Xilinx does look like it's going through, so they won't probably have more to say on that, I can't imagine. But the earnings are going to be very interesting in the semiconductor sector. I'm going to be very curious to watch this. Intel had their earnings in which their margins are feeling pressure, and that definitely caused them to take a nice tumble here. So we're going to see if AMD is feeling the same kind of pressure. PayPal, but look, PayPal definitely not in play these days, getting crushed lately. Gilead, if you're into that stock. General Motors is also reporting they are likely to scrap one of their cars. I saw some bad headlines on them lately. As well. You also have EA. If you're looking at like a gaming company, EA reports earnings Tuesday after the close. Wednesday before the open, you have Humana, big nice healthcare company. Healthcare has really taken a spill lately, but looking at Humana, you also have Waste Management if you like your trash. Literally, if, hey, Ferrari, let's see who's buying Ferraris out there, but really, who cares too much. Wednesday after the close, you have Aflac and Allstate, two insurance companies. Aflac doing well. In fact, Progressive's holding up, Aflac's holding up. Insurance is outperforming the market right now. You also have Meta reporting Wednesday after the close, and I want to see if we can get a date on when that ticker change is taking place. It's supposed to be in Q1. You also have Qualcomm reporting and Spotify. Thursday morning, we'll have BIIB. Biogen has had some crazy moves over the last year based on that Alzheimer's drug. Let's see if they talk about that a little more. Eli Lilly, for you retail traders who like retail stocks, Estee Lauder. I know, shout out to Bravo Mo. We'll see what their earnings are Thursday morning. You also have Hanes Celestial, rather. Hershey, we'll see what Hershey can do. Madison Square Garden, for your reopening plays. Merck. Penn Gaming, so get a little sports betting in there. DraftKings isn't for several more weeks, but they will likely move on Penn, and also Ralph Lauren. Thursday after the close, we have Amazon reporting, so you have another big company reporting earnings on Thursday. Still have yet to hear about anything about their stock split. Definitely listen for that. If they do ever decide to do that, this stock's likely going to take off. So you have Amazon. You also have GoPro. I believe, reporting, but that one really hasn't been in play for some time. Snapchat reporting, WWE reporting, Skechers. We're starting to kind of round some of these earnings out. And then Friday is going to be very quiet with Bristol Myers in the morning. So that's your landscape. That's, the earnings, the economics, the headlines happening this week. It's going to be very interesting. Some other stocks that could be very interesting to watch that I'm certainly going to be watching. I'm going to continue to watch my income gang, my consumer staple dividend plays. They're outperforming the market right now. General Mills hasn't dissolved. PepsiCo's holding strong. Progressive, they bought the missed earnings on Mondelez, like ravenous animals. Conagra is above the 200-day. I like how these stocks are holding up, and I like how they're continuing to look. I'm going to be watching them very closely this week. Robinhood got a nice little dip buy off of $10 a share. Really just looking ugly in terms of their earnings. Just terrible company, terribly run, and terrible earnings. We'll see if they can have a second day play. Walmart got down to a very important level that it's bounced from 1, 2, 3, 4, kind of 5. This could be number 6-ish. Let's see what we get off of this 136 on Walmart. I might look at Verizon. Has had a nice bounce off of these lows. Also a bit of a dividend play as well. Verizon and AT&T have now both reported their earnings. We'll see how that reacts. Some other stocks moving a groove, and I might watch Ford for the breakdown here. Had a very nice move, especially for a stock like Ford, setting up a bit of a head and shoulders on the daily here. We're going to see if we get a pullback in Ford. I might watch for a second day play in Chevron. They reported earnings on Friday. It was disappointing margins for where energy is sitting at. So we'll see if this is going to be important, because ExxonMobil reports on Tuesday, and do they look at Chevron and say, man, this stock is now undervalued compared to a hot sector, or do we see them get hit? We'll see. The defensive plays have obviously been strong with what's been happening in Ukraine. Lockheed Martin breaking out very nicely. I want to see if that can continue. Northrop Grumman had some disappointing earnings, but they bounced off this 200-day. So now let's see if we go maybe for a gap fill towards 400. And then from there, we'll see what we get. Juniper had good earnings on Friday. You might get a second day play continuation there. It's going to be curious to see if people are willing to buy companies like this after their good earnings like that. Johnson & Johnson has had a nice little pop here over the last bit, since their dip. After their earnings, they've kind of dip bought off of those earnings. We're heading back up towards some resistance up here. That could be an interesting one to watch as well. There's going to be a lot in play. We'll talk about this more as we go forward. Every single day during our morning videos, we'll be talking about the stocks in play. I'm not going to go too far into the weeds here, but it's going to be a good one. It's going to be a good week. There's going to be a lot of trading opportunity on the short-term side of things. I have no clue where this market does. No one does, but we've got our levels, we've got our plan, and we know what to look for. I hope that this was helpful, informative, or at least entertaining. Good luck this week. Protect your capital and make some money. I'll see you on Monday for the morning market analysis, and then for our Vant and Rant Monday through Friday at 1 p.m. Eastern. I'll see you all later, and as always, safe trading.